Hi, my name is Suzanne, and over the last 10 years, I've been working and continue to work with many educators who teach investing skills and strategies. And I've met all sorts of personalities in that time. And what I've learned is how to get to the truth and the core of what they teach. So today I'm going to be asking AJ Brown, the president and founder of Trading Trainer, a juicy question. And let's see if I can pull out some nuggets of wisdom from him. Hi, AJ, welcome.
Hi, Suzanne. Thanks for having me on this call. This is going to be kind of exciting. Thanks.
Yeah, I think we're going to have some fun. So, you have some awesome initiatives going on at Trading Trainer, and
Yes.
one of my favorites is your periodic webinar where you give your community the opportunity to ask you anything, and that's over at askajonline.com. You want to tell us a little bit about that?
Yeah, this is something that we do just for the public. We call it the Ask AJ Brown site or askajonline.com. And basically, we invite people to a webinar, and the cost of admission is what their question is. So all we need for you to get registered for the webinar is to just ask us what your single biggest question about how to build a highly profitable option trading practice, what that question is, and then you get the webinar information. And you also, it's okay, I ask people to put in their questions even if they know that they're not going to be able to attend the live webinar because we send out replay information and we send the replay out to everybody who's registered. So I do it kind of as a community service to the public. I want people to get their questions answered and not, it's better to have your question answered than to kind of go explore on your own, because in the case of investing, man, exploring on your own could be costly. So I want to get people their answers. So everybody go to Ask AJ Online when you get a moment, put in your question for the next webinar that we do, and if it's one of the most hot burning questions, it'll be included in that particular webinar. Thanks for letting me talk about that, Suzanne.
Yeah, fantastic. Well, that's a great service you provide, and yeah, I hope people take you up on that because it is sometimes difficult to just get a straight answer to whatever they're thinking about with investing. So great. Well, in the spirit of getting you warmed up for your next Ask AJ webinar, today I'm going to ask you a burning question. And that question is, if there was one thing you would recommend any investor spend the next month mastering, what would it be, why, and how could you go about mastering it? I guess there's a few questions in there, but you get the drift, right?
Yeah,
What would that one thing be that they can master?
absolutely. Um, there's a little background I'm going to give you before I answer that question. And
Sure.
that background is that I have, over the last 22 years, I started doing my own investing in 1997. So over the last years, I have found folks who not only say they have been successful at trading. I verified that by looking at their lifestyle and asking them to actually prove it. And so those people that, because there's a lot of people who say they are successful at being full-time traders, but maybe they're not. And so I first searched out the actual successful ones, and then I asked if I could interview them and even just observe them. And so I've been threatening to put together a book. Maybe when I retire, I'll put together a book of all of my interviews and all of my data and case studies. But what I've searched out to do over the last 22 years as I come across these folks is, after I get the information from the interview, I like to understand what are the similarities, because it turns out there is just a few things that are very similar that these successful traders have in common. And I have found that if in my own uh, trading, in my own investing, if I adopt those few things that they all have in common, that's 90% of the battle. There's,
Wow.
yeah. And so one of the biggest things that all of them have in common, And this is opposite of what I have found with neophyte or newbie investors and traders. And it actually is what I have determined is the differentiator between whether or not a neophyte and investor will wash out and wind up giving up or will be successful is if they pick up this one thing. And I would say, coming back to your question, this would be the first thing you want to master, and you'll actually find out because it's an ongoing thing. It's like something that you'll always be coming back to and always be working on. I'm going to put a quick image on the screen here.
Fantastic. Well, it sounds like you've done extensive research, so I appreciate the little bit of background information you've given us.
Yes,
And
yes.
yeah, let's get into what this is.
Everything that I do at Trading Trainer, by the way, when I work with my own program participants, is not just based on my individual success, because I feel like everybody's individual success has a lot to do with them individually. So that's why I'm constantly trying with my program participants to bring to them what is successful overall for everyone, because somebody might try to walk exactly in my footsteps and they won't get the same results because we're all individuals. We all have inherent differences. But again, back to the point, what I have found everybody who is successful understands is this, that trading discipline or psychology, which is an ongoing battle, it's the mental games we play around money, takes up about 55% of the energy that goes into successful trading. The other 35% is money management, and then there is 10% that is the actual system they're using for investing or trading. And again, I said it was flip-flopped, and that's because like when you go to any of these trading expos to look at different things, what you see are systems, and a lot of the neophyte newbie folks focus on a system. They focus on, for instance, some of them even focus down to what trading vehicle they're going to do. You know, like I'm only going to trade Forex and I'm only going to trade this system to trade Forex. But it turns out whether you're trading Forex, whether you're trading stocks, whether you're trading commodities, options, futures, cryptocurrencies, baseball cards, it turns out this is universal no matter what it is you're trading. Even if you're trading real estate, people who focus 100% on the system and forget about the psychology and the money management are soon washed out. So what I'm saying is yes, the system is important, but it's 1/10 of a successful trading practice, and give it that amount of worth, because it turns out you can, once you have trading psychology and money management in place, you can swap in any system and you will see that you've got all the pieces in place. It's just a matter of doing the scholastic work to learn the new system. So money management. So the trading psychology portion, you know, that is a mental game that only comes through experience. So you're not going to be able to cover that in the first month. The answer to the trading psychology question is just do it often. And trading is a beautiful, you know, way to do this because there's paper trading. You can get the trading psychology, you can get the experience to be a trader without risking a penny. There's no other business or investing opportunity I know of that allows that. So that's one of the beautiful things. There's a test bed built into trading, and it's called paper or simulator trading, that allows you to get your experience without risking anything. So
Do you find that paper trading gives you enough practice, or what has your experience been, or people you know of experience? I mean, is it a little different when you're live and in the market versus paper trading?
no, and people will try to, and I've had arguments with program participants over the last 20 years that Trading Trainer has been in existence. People will try to tell you that it's not the same with real money versus paper money, but if you can't invest with paper money, you already don't have the trading discipline and psychology in place. So that's a place to start. Again, this is a long-term game, the trading psychology and discipline to get in, get in place. It's gonna, honestly, it's gonna just take a lot of repetition. But right there, folks who have come to me saying that they can't get the experience through paper trading and need to do real money, I already know I can put a countdown timer that they're going to wash out. They're not going to, this is not something they can do full time. So that's already a key differentiator for those that are successful. And if you talk to anybody who is successful, even if they've been successful for 30 years, they still keep a parallel paper trading log to this day. So paper trading is one of those skills that if you mentally can't do, if it mentally can't add to your, that's more of a will question. It's you've willed it that it's not going to be helpful, because it is helpful. You're just that sort of, if you will, stubbornness will keep you from being successful. But that again is the long
Great.
game. Let's get back to the question of what people can focus on in the first month, and that is your money management. You cannot, and money management is actually simple to do. Um, so many times I have encountered people who have suffered huge losses in trading, and it can all be brought back to poor money management. Number one rule is we do not manage our investing based on previous success. And if you think about what I'm saying there, what I've just described is the human emotion of greed. If you are,
Yeah.
if you are managing your trade size and position sizing and the amount you are going to risk on each trade based on your previous success, you're basically defining what greed is. And that's usually what bankrupts an investor who doesn't have money management in place and is relying on that. So what should you be doing? No matter what investment vehicles you are trading, no matter what strategies you're trading, no matter who you're trading with, you should always, with every investment, define a bailout. Define a bailout in which you will convert the investment to cash and walk away with cash in a safe position. What is that bailout criteria? In trading, it might be a price threshold that is crossed or a volatility threshold that is crossed or a date on the calendar that is crossed. But what is that thing that will cause you to bail out? And step two, after you've defined bailout, you want to calculate the worst case scenario of the loss you will suffer at that bailout. So if it's a price threshold, for instance, how many dollars will you lose if you liquidate that investment at that price threshold? That's an easy way, but and you always want to calculate the worst case scenario of what that would be. So if you invest $100 And if you're forced to bail out, you're going to lose $20. That means you're going to have a 20% loss. And you want to calculate that, because then we're going to calculate position sizing. How much of your portfolio will you put into that investment? And it's a very simple math problem. It starts by setting up what is your max allowable risk to your portfolio. Now, over the last 15, 20 years of running Trading Trainer and teaching other people how to trade, have come up with a loose guideline, which is if your portfolio you're investing is $5,000 or less, then 4%. At any one time, you should not risk more than 4% of your portfolio. 5,000 to 25,000, 3%. 25,000 to $250,000, 2%, and then anything over $250,000, any individual trade or investment you do should not risk more than 1% of your portfolio. So,
wow, that's a great guideline. Yeah, that breaks it down in simple terms.
yeah, and think about the worst case there, a small portfolio where I'm recommending no more than 4% of your portfolio be up for risk. You would have to do 25 trades or investments like this in a row where you would be bailed out in order for you to wipe out your portfolio. 25. And my rule of thumb for my program participants is if you have 3 in a row that are bailed out, meaning the worst thing has happened and you've had to liquidate the investment to cash, something is wrong with what you are doing in your system, and not just the market is throwing you a curveball. It's something, and so I ask people then to back out and start to analyze their system and find out what's wrong. It's not just a fluke. It's not just random. It's you. So fix it and then come back, because very rarely should you actually be hitting that place where you set the bailout. Bailout is when the proverbial poop has hit the fan.
Right. Fantastic advice. Yes.
Okay, so if we know how much we're going to risk of our portfolio in any investment, taking that number and dividing it by the risk that we calculated if we bail out will tell us how much of our portfolio we can invest. I have the ability here to put a calculator up on the screen to do that. Say, for instance, we have a $25,000 portfolio, and we are therefore going to risk no more than 2% of our portfolio in any one investment, any one trade. So there's 2% right there. And we calculated that if we bail out of that example one I gave you, we said there would be a 20% potential loss right there. So I divided 0.02 divided by 0.2, and that tells me that I can put 10% of my portfolio into this one investment, which is $2,500. And so it's that easy. Always know, first of all, always set a bailout, then calculate the max worst case scenario loss at that bailout, and then calculate your position size. That is money management, and it needs to be nailed down in the first month of anybody's foray into investing.
Fantastic. You've broken that down into really simple terms and it's explained nicely. One of the best ways I've heard it explained. So thank you for taking the time to go through that.
My worst case scenario, and I'll just end with a quick story here, is, and I wish that this was not something I don't hear just about bi-weekly, but somebody
Mm.
will come up to me. They've seen me on YouTube, they've seen me in Facebook, they've seen me on all the social media sites, or they've just found our websites, and they'll tell me a story about, hey, I learned XYZ strategy to trade 1, 2, 3 ABC investment vehicles. And it was going well. I was making, 10% on my portfolio every month. And around month number 9, things were going great. And so I just rinsed and repeated on month number 10. And the market threw me a curveball. And it was just something that I never would have expected. And not only did I lose all of the gains that I made in the previous 9 months, but I lost half of my portfolio. Now, as we just defined, if you're following good risk management, the worst is if you lose 4% of your portfolio and you're in the game for 24 more times. So when they tell me that they lost all the gains that they made in the first 10 months and they lost half their portfolio, I know that they missed the key piece, which is risk management, money management, and position sizing.
Excellent. Yep, they're missing that 35%, which is so important. And you've harped on the importance of
And
really
it's
knowing that and understanding it.
so
Yeah.
easy. It's so
Hmm.
easy to master in less than a month, but it is the number one thing that can be mastered in the shortest amount of time, and it needs to be in place in order for somebody to be successful. Then focus on your system, but get money management down pat.
Fantastic. Well, you've definitely answered my question and given us some great examples of how to do that. So I really appreciate it. I think we're going to wrap up now. We're about out of time, but there's a couple of things I just wanted to mention to our listeners here. So if you have any burning questions for AJ, just as a reminder, you can go over to askajonline.com and submit your question there, as he's going to be doing these webinars periodically to answer your questions. He'll take the most burning hot topics and answer them for you, right, AJ?
That's absolutely correct. That's exactly what my plan is.
Fantastic. So we will be doing another question, you and I together, and the next time I'll be asking you, what's your recommended book on investing? And we'll get into that. So I hope you listeners out there will join us again. And thanks again, AJ, for your time. This has been wonderful.
Thank you. Thank you for having me.